Did you know that an expert says that Tesla stock will be worth up to $2,500 after the Q2 earnings report? This may be quite hard to believe given the current Tesla stock price. Make sure to stay tuned and keep watching to find out why he said so. In recent months, Tesla stock was in the $600 to $700 range. However, just after the Q2 earnings report, the stock sits in the $800 range. It is no secret that there are extremely high valuations for the EV company's stocks. Tesla bulls believe that Tesla's stock price will continue to soar now that the company seems to have addressed supply chain issues that plagued production for almost 2 years. Today, you will find out why an expert said that Tesla stock will be worth $2,500 after the Q2 report. Investors have been anticipating the Q2 earnings report to see how much the dip has affected Tesla. Before the report's release, Carter Worth of Worth Charting, known as the Chart Master, said that the electric automaker is sitting on a knife's edge. Worth said, "You can feel the tension. It's a nice edge. It's sitting finely balanced between success and failure." He referred to a chart and said that he calls it high volatility, low variance. According to the Q2 financial report released by Tesla, the EV maker reported revenues of $16.934 billion, which is about $400 million more than Wall Street expected, and earnings per share of $2.27, non-GAAP versus $1.81 expected by Wall Street. The company increased its cash position by $0.8 billion to $18.3 billion during the quarter. Automotive gross margin came in at 27.9%, down from 32.9% last quarter and 28.4% last year, brought about by inflation and more competition for battery cells and other components that go into electric vehicles. Automotive revenues made up $14.6 billion of the company's total, with $1.47 billion coming from services and other revenue, and $866 million from the company's energy segment. The same report showed that the company generated $344 million in automotive regulatory credits revenue in the second quarter, which is a $10 million or nearly 3% decline from the same period in 2021. According to Gene Munster, managing partner and co-founder of Loop Ventures, a research-driven venture capital firm investing in frontier tech companies, the auto industry is a $2.5 trillion market, and Tesla is one of the few companies that are leaders in the said industry, and that the EV company have outsized demand for their products. Munster stated that in June, Tesla reported 27% delivery growth, which is a considerable drop from March's 67%. He said that the reason for high growth, despite the fact that it's getting more expensive to purchase a car and even more expensive to take out loans on a car, is because people want to own cars. He said that the demand for Tesla products outpaces their ability to produce them. He compared Tesla's production to that of General Motors, which produced 60,000 to 70,000 vehicles respectively. Because of this, he believes that the company will eventually have a higher valuation and may well possibly be worth $2,500 in the next 5 years. In the earnings report Tesla presented, it is quite evident that the company was able to rise amidst the roadblocks the EV company went through during the quarter. More than that, the company has made a lot of progress on the notable innovative projects they are working on. Before the report was made public, Tesla stock was around $740. The day after that, the stock was in the $800 range. The stock is currently sitting at $816.73. In the earnings call, a lot of projects were discussed, including Cybertruck, FSD, and 4680, among others. In the said call, Tesla CEO Elon Musk said, "Q2 was a unique quarter for Tesla due to a prolonged shutdown of our Shanghai factory. But in spite of all these challenges, it was one of the strongest quarters in our history. It is no secret that production had been greatly affected when supply chain issues arose when China enforced the zero-COVID policy. That said, Musk believes that they have the potential for a record-breaking second half of the year." He further stated, though, "I do want to emphasize this is obviously subject to force majeure, things outside of our control." Musk said that the company is currently making the cars with the 2170 cells and is not dependent on 4680, since it will be important next year, but it is not important this year. In line with this, they have installed the second generation of manufacturing equipment for 4680 cells in Texas and other factories like Fremont and Shanghai to expand capacity. Regarding autopilot, they deployed FSD Beta with city streets driving capability to over 100,000 owners who are very happy with the capability of the system, and Tesla aims to continue to improve it every week. Musk shared that the team continues to focus on Cybertruck production readiness and some future platform design. They are expecting to be in production with the Cybertruck in the middle of next year. I think it might actually be our best product ever, says Musk. Do you think Tesla will continue to perform well from here on? Share your thoughts in the comment section below. According to Tesla's chief financial officer Zachary Kirkhorn, although the company's production volume reduced sequentially due to COVID-related shutdowns in Shanghai, they still made substantial progress in nearly every area of the business, particularly in the global vehicle production rate, thanks to the entire Tesla team. Moreover, the Fremont factory, supported by the Reno team, reached new production records while the Shanghai factory resumed full production, and new factories in Austin and Berlin are progressing well through their initial ramps. Additionally, the energy business achieved record gross profit with the highest solar volume in many years. Kirkhorn shared that they converted a majority of Bitcoin holdings to fiat or a realized gain, offset by impairment charges on the remainder of the company's holdings, netting a $106 million cost to the P&L included within restructuring. He also said that they incurred restructuring charges related to targeted staffing reductions. Musk explained that the reason they sold a bunch of the Bitcoin holdings was that they were uncertain as to when the COVID lockdowns in China would alleviate. So, it was important for them to maximize their cash position given the uncertainty of the COVID lockdowns in China. He added that they were concerned about overall liquidity for the company given COVID shutdowns in China. When asked about how Tesla can make sure the company is staying ahead of the Chinese EV manufacturers who seem to be doing a better job at innovating in software and design than their Western competitors. Chinese EV manufacturers seem to be doing a better job than their Western competitors, excluding Tesla, at innovating in software and design. How can Tesla make sure the company is staying ahead of those manufacturers both within China and outside of China? Musk said that right now the best Chinese EV manufacturer is the Tesla Train. Musk said, "I have a lot of respect for the Chinese, our manufacturers and EV manufacturers in particular. I think they will be a force to be reckoned with worldwide. They're very smart and they're hardworking. So obviously we have a lot of respect for the current companies in China and their capabilities. Yes." While Tesla's Q2 report is better than expected, a $2,500 price tag may be a little far-fetched at this point. It may be worth noting that although there is a $2,500 valuation for the EV company's stocks, it is predicted for a couple of years more from now. In fact, an analyst predicted Tesla stock to trade above $2,500 by 2025. Cathie Wood, an American investor, a star stock picker, and the founder, CEO, and CIO of ARK Invest, a company with $60 billion in assets that invests in innovations like self-driving cars and genomics, set a $3,000 price target for Tesla by 2025. What Tesla investors can hope for is that the EV company's stock remains in its current $800 range price tag, or for it to increase even more. It is worth noting that just a few months ago, Tesla stock was in the $600 to $700 range, which made other investors sell their shares. One can only hope that the company will continue to perform satisfactorily from here on. One notable reference to Tesla is from Morgan Stanley's Adam Jonas, who said that the current landscape for EVs is a race, and Tesla has been winning so far. He compared the EV industry to a marathon and said that Tesla leads at mile 21 while other companies are still at mile 2, while others are still tying their shoes, figuratively speaking. He supported this claim by explaining that recent records of car deliveries are proof that Tesla's position remains strong and is becoming stronger as the marathon progresses. For more Tesla stock content, make sure to visit our channel and watch our other videos.